All right, everybody. Welcome to the Coach's Playbook. It's Tuesday, February 2nd, Groundhog's Day, 2021. And I am joined by the other coaches. How are you guys doing today?
I'm great,
Good.
Jack. How are you?
I am doing just fine. I'm experimenting with doing this out in the living room. Hopefully, it works. Hopefully, my wife doesn't walk in the middle and do something that would embarrass me, but I'm confident she won't. Anyway, today we're talking about squeezes. Because obviously the big news in all the financial markets this week is everything that's been going on with the squeezes and a whole bunch of meme stocks, as the kids say, but they used to be movie theaters and stores where you could sell video games. And we'll dive into that. But first, Mick, you got a trader shout out for us?
I do. Big shout out to Marcel Jara. He's currently up $6,900 trading the NASDAQ right now. 6,600 actually.
Oh, good for him.
Really
Things
good day.
change
quickly.
Yeah, I
Right?
think things are definitely rocking and rolling. I know with the podcast last week, we were talking about how there wasn't that much volatility sort of in the indices. But that's changed quite dramatically. We had the biggest down day of the year, the biggest up day of the year. And a lot of it feeds back to there is this massive, I'd say, social obsession. I'm at the barber shop, I'm hearing about it. You can compliment me on my haircut, by the way, when I say that.
Fresh.
People
The hair looks good, Jack.
Thank you. People that follow the markets, people that don't follow the markets, people that don't follow the markets and are in the trade. Everyone's kind of talking about GameStop, Robinhood, and what's going on there. So it's kind of an interesting time for us to talk about it because today it looks like you never want to say never, but it looks like the party might be over a little bit in GameStop. So the dynamics there, you everyone out there who's watching this probably at this point knows kind of what's going on, right? Uh, Huge short squeeze led by, I'll give the sort of media narrative, hedge funds versus Reddit traders on a stock that has been battered because it's a strip mall gaming store. But some people noticed that it was trading at its lows, way less than its book value. It had Ryan Cohen, who's the founder of Chewy, came in, bought 12% of the company, and Chewy kind of is a good model for what not Robinhood, what GameStop could in a perfect world become, sort of this massive, the Amazon of, if we're saying best case scenario, like the Amazon of gaming. People got caught short. And I think a perfect place to start this from mechanics. Well, first, let's go around and get any initial thoughts on what you think this kind of means. I'll let Hogue, because you've seen it all. Why don't you kick us off?
Well, this is probably the first time a lot of people are hearing about any kind of a squeeze in the marketplace, and these squeezes don't happen, as rarely as people think. They happen on a daily basis. It's anytime you have a specific time frame group of traders one way, you can squeeze them to force them to get out. Uh, take this example in the trading pit. The people trading off the floor were always asking the brokers, what is the pit? Is the pit long or short? And in other words, they were looking to see if the floor traders were had accumulated positions either too long or too short in order to make their decisions on when they want to get into the trading pit. If the floor was too long and there was no more buying coming in, the locals all looked around and said, oh boy, we better get out. And they could drive price lower just by the sheer number of people and contracts that we were trading. So when it comes to a squeeze, they happen all day, every day in much smaller ways. And if you can find ways to get your direct opposition, the people in your time frame, if you can recognize when they're one way or the other way, you can use that to your advantage. So it's the trading places effect.
Good flick. Yeah, I think an important dynamic of anything that's going to cause a short squeeze on this massive scale we've seen, you need a limited or even finite supply of something that is you're not able to make more of. In this case, GameStop shares. You bring in the concept of for individual stocks, you have something called float. Float is the number of shares that are available to trade, and short interest is the percent of shares that have been lent out that for shorting, which they eventually have to buy. Now, it's very hard in practice. The NASDAQ every 2 weeks announces their short interest in the stocks, but on a day-to-day basis, it's very difficult to actually know what the percent of short interest is versus float. People were saying this GameStop thing was 140%. It's hard to verify these things, but the thing to remember with stocks is the float is the float. The company, I suppose, could issue more shares, but if you are short more and owe more shares back than exist, you're kind of effed in the parlance that people would say. So that's kind of what we saw happening a little bit. Dan, you have any further on any of that?
I mean, ultimately, your first thought, or your first question, just those initial thoughts that happened when this all took place. First off, the first time I heard about it was a cousin of mine who's a doctor and he's never been into the markets. He calls me and goes, "Hey, should I buy a bunch of GameStop?" And I go, "What are you talking about?" And he's like, "This Reddit thing. It's all over Reddit. I'm thinking about buying a bunch of GameStop." And so I kind of delved into it a little bit and I'm reading and I'm trying to understand. And I'm thinking, first and foremost, is this Wall Street bets on Reddit really strong enough to manipulate essentially a stock and move it in a direction like drastically that we're going to make big money? And my first thought was like, no way. There's not a chance. But I think the coolest thing is they rallied together. They did exactly that. And they were the Robinhood, of the story tale, not of the trading world. They were the Robinhood. And I loved that concept. And then when everything started to play out this last week or so with what's going on with Robinhood, with this idea of the bigwigs are losing their shirts on this stock, I initially run to when is the regulation going to hit? Because that's coming. That's where my thoughts around this. Obviously, I think we're very benefited and fortunate in the futures market that you don't see this very often, if ever. I mean, I've heard stories about back in the day in the bond pit. My old man has told me stories about a guy who had majority of the market in his hands and he could manipulate it in a sense. He could say, all right, I'm starting to sell, and he'd run the market down, and then he'd buy him back up, and he'd run the market back up, and he'd just keep being able to move the market. And he said it only happened once or twice in his whole career that he ever saw it. But I'm waiting. I'm curious to see, really. I think this GameStop thing is just such a small little blip of what this is going to really be over the long term.
Yeah, there's a few already. The consequences are if you're a hedge fund that's short anything, you have this new sort of
Bullseye on your back.
bullseye of this is another thing you have to think about, which could be good. One thing I want to throw in is just that goes a little bit against the narrative. I think there were a lot of big wigs on the long side of this trade too.
Oh, for sure.
Yeah,
They had to have.
Yes, I think that, and we'll get into one of the questions we want to talk about that we get from people is, can this happen in the futures market? And the answer is yes and no. It depends on what you're trading. We'll get into that a little bit. But I think that the whole new thing that's really coming to focus, I didn't trade options back in the day professionally, but these massive gamma squeezes that have been going on through this whole rally. And for the viewers out there, I don't know if you're into options, but like the first thing is delta is what they is. I'm trying to think of the most succinct way to say it as possible. It's basically you're hedging.
It's your risk. Delta is your
basically.
risk. And you want to keep yourself at delta neutral to manage that risk so that whatever direction the market goes, all, as we call them, the Greeks, all your Greeks down the line of if the market upticks 10 ticks this way, 10 ticks this way. What's my delta going to be? How much gamma do I have on? What's my vega and what's my theta?
Sure. And gamma is the rate of change in delta. So what's been fueling a lot of these massive explosions this year is you got all these diamond hand investors on Reddit, etc., buying way out of the money calls, just GameStop 800, and basically forcing market makers to buy more and more GameStop stock as the price rises to hedge against those at some probability going into the money. Is that something that was sort of, it's only in the last year that I've just like really heard about that gamma squeeze phenomenon all over the place, Dan. Is that something that you saw?
Well, keep in mind the options world I'm in. There's not really that. It was treasury options.
Sure.
It's not very retail based. It's basically 100% professional. So we avoided any of the stock options. We didn't really we never touched that. We were strictly 30-year bond option. So never really a conversation we had.
They're not going to squeeze the 30-year bond to a negative
Not really.
50 yield. uh, yeah, so it is sort of a stock specific. So I've been super interested in just watching these dynamics play out. Mick, you traded physical commodities, so we can go into futures a little bit here, where indices, you're not really going to see a squeeze like this. They're massive, and you can create as many contracts as you want. They're cash settled. You can have as many as you want. But if you're trading grains or something,
Mhm.
ultimately you got to deliver those grains. So did you see a lot of those dynamics play out?
Well, anytime I think of a short squeeze, I always think about a day that's referred to as Evan Dooley Day. Evan Dooley was a trader for MF Global, and you can Google this, look him up. Back in 2008, Evan had acquired a large short position in the wheat market. And when it comes to, I'll just kind of step back here, when it comes to a physically delivered product, I mean, or any product, I mean, when it comes to squeezing that market, it takes an enormous amount of money and purchasing power in order to do so. Whether that's on an individual or a group, or if some people band together, I think what happened with this Evan Dooley Day is I think he amassed a short position in the wheat market of something like 15,000 contracts. And people found out that, this firm and this guy had, kind of shorted a lot. And what happened, the wheat market went that day. He shorts 1,500 contracts overnight. Eventually, after suppressing the market down by selling all the, the heavy selling, people ran the market up on him, and the wheat market went limit up that day and then limit down that day. And turned out, he got taken out of his position. He amassed $140 million loss that trading day. And
they didn't know he had it on, right? In the version, was he the the MF Global trader where they
yes.
did not? Okay, so this was sort of a rogue trader scenario.
Yes, he went rogue. I don't think MF was aware of this. I think he exceeded, what his guidelines were at the firm.
Yeah, probably.
And so, I think one thing, and everybody probably has an understanding of the short squeeze and what happens. You get people that are short, people try and, run it the other way against them. That causes new interest and new buying, and it also causes anybody who is short to puke their trade. So it just causes, a huge slingshot in one direction. And hang on one second. Sorry, I'm working from Dan's house, and we've got Sarge, Danny's dog, and my dog Reva here, and they are they're the neighborhood watch right now. So you probably heard that bark and then a chicken squeeze. So,
Yeah.
Anyways,
Dog's over there.
this Evan.
Yeah, we saw Rodney climbing up on the windowsill.
Okay, yeah, I know he's back there somewhere looking out the window.
We're all dog lovers here. So Evan got ran out of his position, and turned out that he lost $140 million for MF Global. And in the weeks that came after he blew out of his position, the wheat market had broken down so significantly. So he ended up losing. He would have been dead right, but he obviously overstepped his position sizing to the point where he didn't get to reap the benefits of being correct, and he was in the whole 140 million and ended up spending some time in jail.
Yeah, you got to hand it to MF Global for, I had almost forgotten about that because, they said $140 million. That's nothing. Let's lose a whole lot more money, which you can read about Corzine and all that.
So one other thing I wanted to say about, these short squeezes and squeezes, and John had mentioned earlier there, I actually can't remember if it was on film or if it was in our conversation prior to doing the filming. You can see this at a large scale or a small scale. People get shaken out of trades every single day, and so in a way you could say there are these little miniature squeezes on a daily basis. If we take out a previous day's low, there's going to be some stops where people have to get out of their trades. There's also going to be people that start hammering the market, selling as we're at those low levels, and all it does is accelerate. It's the new selling, it's the stops getting triggered, and it causes an acceleration. So if you've ever been stopped out of a trade, or had something run against you really quickly like I have, that's just another version of a squeeze, but on a much smaller scale.
Yeah, and I think it's important, a market like that, if we're talking specifically about GameStop, you got to be really careful. We talk a lot about not getting completely married to your instinct or just becoming an absolute zealot for one side of the trade. There's nothing inherently wrong with taking either side of that trade, but I think you have to be careful and not fall into a lot of confirmation bias. One thing that I saw 2 days ago when Robinhood started limiting the number of shares is immediately uh, everyone, and I hope I don't get pilloried for saying this, but everyone went to, this has to be a conspiracy, and we have them this close to pull on like a 2008 Volkswagen short squeeze. Versus the reason that they give, I still think it's a little scummy on Robinhood's part, but the reason that they give is just that the clearinghouse is probably demanding more capital against all these traders they have out there that are in this very volatile position. And I think it could be as simple as that. And what I saw was a lot of people taking that as, well, we're doubling down because of this, whereas it might just be, that's just sort of the way the plumbing works in the system.
I would agree with that thought process if their clearing firm wasn't Robinhood Clearing, where they know their business model on the Robinhood side and they're clearing through their own clearing firm, where they have this idea and they have an understanding of it. And so I think, I'm on the little guy's side on this one. I mean, let's go at them.
Well, yeah, I mean, you can be on the little guy's side, but I still think, regardless of that, when you see a move this extreme, and like we are in uncharted territory where I cannot think, and this is why this is such a big story. I can't think of a financial trade where there was so many parties into something. So when you look at the Volkswagen squeeze, that was done by Porsche, right? It wasn't 100,000 or however many people are in it all acting on their own. And I think that, once again, I'm not defending what they did, but I think it is a little harder to assess your risk when you have that many people trying to force one trade.
For sure. And I think about it, I think this shows, you're talking about Volkswagen in 08, the barrier to entry was a little bit harder back then. For everyone to engage, you had to have some sort of E-Trade account, Fidelity, whatever it was, you had to have some sort of brokerage account. You can't just like jump in, create an E-Trade account and be active that day. It takes a couple days for your money to transfer in, for them to create the accesses and grant all that. Where Robinhood, you can sign up and within 30 seconds, you have your first ever stock. So you have this availability, and it just goes to show the direction of this industry that we're in and how much it is changing. And Mick mentioned it when he talked about futures, which is maybe where this stuff starts to go, is some concept of limits, more extreme limits. When he's talking about the wheat, went limit up, stopped, halted trading, went limit down. Do they start to bring that into these stocks? What are they going to start to do? And that's really what I'm like, popping popcorn for, and I'm excited to watch what happens.
Yeah, just in case people are watching this later, GameStop right now is at 120. It went as low as 70 or something today, down from 500. It's very volatile time. Hogue, I had a question for you because we can continue this. We'll take some questions if there are any in a little bit, but I think that, is this going to be a thing? You mentioned regulation. is we're kind of paying the piper in some way. For Robinhood's whole thing was they started this zero commission brokerage, right? And we could do a whole episode about how they make that work through selling trade data to places like Citadel.
Mhm.
Is this kind of showing? Is this a once people get something for free, they don't want to start paying for it again? But is this sort of showing cracks in the system? And do you have any ideas what we could see as far as regulation coming down the pipeline? Like, I'm curious, and no one necessarily has an answer for this. Is the zero commission, because everyone's got to eat at the end of the day. Everyone's got to make money. Is this viable in the long term?
Well, anytime you put more regulation on an open market, I don't think it's a good thing. So I hope that it doesn't create a wave of new regulation or even new taxes on transaction and stocks and then maybe eventually into futures. I know that the city of Chicago has been talking about an execution tax on the Chicago Board of Trade and the Mercantile Exchange for years. We've been able to fight it off, but more regulation is not necessarily good. But you also want to make sure that it's a level playing field. The question about selling the order flow information for free stock traders to professionals, there is a bit of a question in my mind about how how moral that is, maybe, or how ethical. I'm surprised that it's allowed by the SEC. The SEC is pretty strict when it comes to insider information, if you would call that insider information. So the regulations could come in. Nobody really knows, of course, as you mentioned, but I'm anything that inhibits a fair and free market, to me, is a bad thing, and I just want to make sure that any new regulations that do come in don't hinder that.
Yeah, and I think the reason that the regulations are complicated in this is I think the order flow selling really hurts by and large. Thank you, Rodney. If you could hear him howling in the background.
It's a dog day.
Yeah, are people that are active traders, because the people that are buy and hold. 1 second.
I don't feel so bad now. Danny's in his office. I'm in the kitchen, so I'm with the wild dogs.
Nick's got the animals.
I'm gonna go grab him if he keeps on going. But for someone that's buy and hold on Robinhood, it probably doesn't matter that Citadel's doing what they do. But for an active trader, I mean, they wouldn't pay Robinhood $88 million last year, whatever it was, if they weren't making more than $88 million on the other side. So I think what are you giving up? Would it almost be better to have some sort of commissions on it? I don't know. These are just thoughts that I have.
I like thoughts. I mean, ultimately, it was an interesting situation. I think you're going to start to see a little bit of this coming down the pipeline here now for at least a little bit of the time being. We're already seeing it in some places, other stocks or what have you. The fire has been lit, and these Reddit guys want to keep going. A lot of them made a lot of money, no doubt about that.
Yeah, I agree completely. I mean, this turned out to be kind of using technology for a new strategy. And, if you can find a way to make money, you're going to do that.
Exactly.
Innovation never sleeps.
It's written on the chalkboard over at Top Step.
Yeah.
All right, cool. Well, I know the comments weren't working last week, Dan. Because I was trying to.
Comments are working. We just have a bunch of hellos. So Felix and Althea. Thanks for commenting in here, but other than that, nothing. Relatively quiet today. Maybe we weren't as exciting.
No, it means I'm 100% right. No one dare question my grasp of the situation. Well, in that case, it might be a good time to Dan. I hear you got a doozy of a quote for us.
Oh, do I? Oh, I do. I'm excited. So with Robinhood being the talk of the town, I wanted to get a quote from Robinhood, but not the stock trading, the classic movie. And it comes from Friar Tuck, we've all seen Friar Tuck, and he says, he's talking to Sheriff Nottingham. He goes, "You want taxes? I'll give you taxes." And so I thought that kind of tied in really nicely with the possibility of what could come.
Nice. My high school mascot was a friar.
Oh,
Didn't
there
have a
you
name.
go.
Yeah, there you go. So I that is my connection to that. Very cool, guys. Well, does anyone have any parting thoughts here, or should we send it over to Hogue? All right, Hogue, give us your trader blessing here.
The get out there and profit, trade well.
We'll see you guys next week. Thanks for joining.